Welcome to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm speaking to you here from New York City on the 25th day of April 2017. I'd like to remind you each and every week that I'm also the author of a newsletter, Jay Taylor's Gold, Energy, and Tech Stocks, and you can subscribe to that by going to miningstocks.com. And also I'd like to encourage you to consider subscribing to Chen Lin's excellent newsletter. You can go to chenpix.com to do that, chenpix.com. I want to thank each of you for listening to this show, and I do want to thank our sponsors for making this show economically viable. Starting with a new sponsor today, Genesis Metals Corp. is joining us today. It's a company with a very interesting and I think potentially very large gold deposit in the Abitibi Greenstone Belt in Quebec, and a new entry into my newsletter, a company that I've just recently started covering, and one that you'll be hearing from on this show sometime in the near future. Other sponsors for today that make this show economically viable: Dynacert Inc., Arvista Gold Corp., Trimetals Mining, Telson Resources, RN Resources, Novo Resources, and Uranium Energy Corp. Before we get started with today's show, I should tell you that I have posted some interesting interviews at J. Taylor Media. You know, there's just not enough time on this show to pass along these companies that I think are very, very valuable, potentially very valuable, and have lots of upside potential. Brian Ostroff, I interviewed Brian. He's the CEO of a very unique company that's producing, that will soon, we think, at least they've gone through a feasibility study, a phosphate project in Quebec that looks as if it should do extremely well for those who invest in the stock now. Brian Ostroff, you can listen to that at jtaylormedia.com as well. Yesterday I interviewed John Kaiser, who has several very exciting investment ideas in the mineral sector. He talked about Camino Minerals, which has been on a tear, has pulled back some today, but a copper discovery in Peru. Another company called Scandium International, very unique company, Atomera Minerals, and SK Mining Corp. Those are all some that John talked about. You can get his insights into those companies by going to jtaylormedia.com. And John also has a very interesting project that he's working on. He's going to be creating an investment community in which technical people provide information about companies that they are involved with in one way or another. This is to help people like me who aren't geologists or technical people to have a better handle on the technical aspects, the risks and the rewards inherent in these very early stage exploration stories. So I think that's another thing that John's working on, and he talks about that as well at J. Taylor Media. I've titled today's show Savvy Investment Ideas from the Bible, and Peter Grandich, Ralph Fitch, and Michael Oliver return as guests. Well, conventional wisdom in the Western world these days is that the Bible is a book of fairy tales with very little for anyone of sound mind, very little value of anyone of sound mind. But the Bible does talk a lot about money and finance more than almost any other topic. And so I'm wondering, might there not be some good old-fashioned advice from the Bible for investors in a world that is really drunk and running amok with endless amounts of money created out of thin air? Might there not be a connection between the growing economic problems the world is facing and the fairy tales, not from the Bible, but from the likes of John Maynard Keynes and his disciples at Harvard, Princeton, and Yale? Might there not be a connection between the growing economic woes of the global economy and the Keynesian notion that money can be and should be created endlessly out of thin air, even though that process is in fact theft of property by government and central banks? Well, we'll explore some of those ideas with the former Wall Street whiz kid, Peter Grandich, as well as seek Peter's views on the current runaway stock and bond markets. And joining me in a few minutes after our first commercial break, Ralph Fitch, the president and CEO of Trimetals Mining. It's a company that is in the process of outlining a multi-million-ounce gold project that straddles state lines of Nevada and Utah. Trimetals has been actively drilling and exploring and building up its resources, and it's my understanding the numbers are improving, the average grades are improving. Already a very robust preliminary economic study, but it looks like Ralph and his team are building up an even more valuable company right now. Well, before we go any further, though, right now, to help us keep our feet firmly planted on solid ground, the always reliable and almost always accurate Michael Oliver is with me to talk about the dollar, which is breaking below some key levels, and what that might mean for the precious metals and other markets. So thank you so much for being with me again, Michael.
Hi, Jake. Good to be back, Jake. Good.
Always good to have you with me. That reassuring voice that I hear from you down there in North Carolina or South Carolina, wherever it is that you're at
North
today.
Carolina, right?
North Carolina. Okay, that's closer to New York. That's better. And I should tell our listeners again, as I like to every week, it's olivermsa.com, olivermsa.com to learn more about Michael's work. Well, Michael, you have been looking for a dollar close in the dollar index, as I understand it, below 99. And as I was preparing for our show today, actually right before we went on the show, I see a 98.64 handle for the dollar index. Do you think this marks the start of a prolonged bear market for the dollar, or do you want to see more confirmation, perhaps with a monthly close below 99?
I want the monthly close. Yes, I really do. I want the monthly close at or below that level, and we've been looking at. We identified that number late last year. The dollar index has now 3 times danced upon that level. Once approached it in February, didn't touch it, rallied sharply, came back slightly under it in March, rallied back up, and now is a little more deeply below 99 than at any time in the year. I still want a monthly close there or lower, or trade as low as 99 even on cash dollar index. The main function here is the euro. We put out a report prior to the French election results on Sunday, so in the afternoon our time, and prior to the closing of the election, they're saying that probably it's a stay-the-course type result, meaning Macron will win. It will be of the 2 finalists, which he was, of course, and this was not a great surprise. But the odds are that he will win the May election because forces will coalesce behind him and probably give him enough edge to beat Le Pen. Things are in flux in the world, but on the other hand, these numbers are pretty heavy. They're not marginal. We're not talking 5% difference. We're probably talking 10 and 20% difference. So let's assume we stay the course with Macron, meaning you stay the course with a guy who's a statist, whose support comes from the middle and the left. He's not affiliated with a party, but on the other hand, he doesn't want to change anything, really. And so it's more the same. And, of course, that's what the investors in the stock market would like to see, especially in Europe, is, oh, gosh, let's don't break the EU up. Let's don't even threaten or talk about it. Let's stay the course. And so with that reassurance, the euro is rallying, and we expected the euro to rally. It is the heaviest weighted currency within the dollar index, and it had to be the factor that moved, and it has. It's moved up about 3 points since the election. It's well over 109 now. It's approaching 110. But the dollar index needs to be, it's the key. I want that 99 or lower monthly close. If I see it at that point, MSA goes to major negative on the dollar index. And we think the wave effects of that, not day by day, minute by minute, or even week by week, but it, in general, should be beneficial to the gold market, to commodities in general, and to an asset class shift favoring those markets.
Right. Well, certainly we've seen gold take the opposite move the first 2 days of this week anyway.
Yes, yeah. I think that's largely a function of gold had just produced a straight 6-week up move, higher lows each week, higher highs each week, had produced a dramatic rally from the late lows of last year, after having poised just below 1250 for repeatedly couldn't get above it on a weekly close, finally did it and unleashed. So just on a technical basis, just looking at price charts, he had so many up weeks in a row, and therefore let's have a breather. And therefore I think that is the dominant factor there, not dismissing the euro strength with the dollar weakness. I think that'll assist gold later on. Right.
Well, just to give our listeners some sense of where you think what some key downside risk numbers or, say, support numbers for gold might be now, what would cause you to change your mind if we saw anything? Well, how far would gold have to drop?
I have a problem with that in that the clarity of things below the market, meaning things that if you broke it look bad, I can't find many. That's the problem with gold.
Uh-huh.
But I, in general, thought that 1250 should be support. It was resistance on the way up. We spent 3 or 4 weeks trying to mount a weekly close above that level, and when we finally did, we went up and approached almost 1300. So I'm assuming that the next day or so, 1250 should be about the lower end. We've been in the below 1265 today, so we're about $30 off the recent high. So I think the support's probably just below us. The problem is I do not have anything major below me that says, oh, you broke something very bad. And normally we function that way. Momentum structural analysis, before it ascertains a trend change, we want to see some structure broken that looks meaningful. So when you look at the momentum chart, you see something that's really being broken. And right now gold's just pulling back in a void.
Yeah.
There's not really anything being broken. It's just a pullback. So I think it's best to treat it that way.
Well, I think from my perspective, as one who's invested in gold mining shares, the markets, the shares have taken quite a hit the last few days, more than the gold. I think percentage-wise, might be a good time if you have that kind of assurance that we're near a bottom. It might be a good entry point for people that haven't been in. Just with 2 minutes left, Michael, stocks seem to be defying gravity now. Is that this sort of risk-on again idea, since everything is status quo in Europe?
Election made them confident again. Plus, there's talk that they're going to get something done in Washington and all that and so forth. There's a lot of hopes, and many of which may turn out to be true, and some not. But there's a fundamental factor here that people have to put into place. It's also evident on technicals, and that is that if the S&P were starting up with fresh, brand new, hopeful horizon based on tax cuts and so forth, but we were down at 1100 area, that's one issue. But from 2011 to 2015, the central bank put the market up deliberately.
Right.
Therefore, we've got many hundreds of points below the market that have been created out of central bank policy, not out of real-world events. So the question is, does that void below us, that bought and paid for by the central bank part of the bull market, does that need to be cleansed out at some point, regardless of all the supposed good news at this end?
Yeah.
So it's a huge question mark.
Yeah. Well, one would think the answer, those of us who believe in free markets and the laws of nature would argue that that's what needs to happen. But then, and maybe eventually it will, but how long will it take? And this is where your work is so valuable to me, Michael, because you're watching this thing day by day and giving us a sense of where those breakage points are and when we need to change our thinking. So it's very helpful. I want to thank you again for being with us. Again, folks, it's olivermsa.com, olivermsa.com. Thank you, Michael, for being with us. And one last thought, perhaps. Did you have something else you wanted to say?
No. Anybody would like if they go to our site and if they look around and check out the rates, see if they're too high. We are a fairly pricey report. We put out a lot of research. But if the price doesn't look out of your pocket, ask for some samples. We're happy to supply them. And there's a box there you can fill out, and we'll send you some sample reports so you can familiarize yourself more closely with what we do.
That's a very good idea.